All right, everybody, welcome back into Mining Stock Daily. We are touching base with our friends from Sudbury and Magna Mining for an overdue update. In fact, it's been over a month since we've heard from the company and CEO Jason Jessup. That was back when the company announced their initial mineral reserves for McCreedy West, and they also had some follow-up drill results at Lavack at the same time. Since then, the company's been very active doing some marketing and obviously operations at McCreedy and ongoing development work at Lavack as well, the other assets there in Sudbury. So we thought we'd touch base with Jason once again to get an update. There's a little bit of volatility in the market, so we're going to talk about how that is affecting operations and management of projects, and then also kind of what the outlook is with mine operations. So Jason, good to see you. Like I said, long overdue. Glad to have you back on.
Absolutely. It's a bit overdue for sure, Trevor.
Yeah. You have been running around marketing the hell out of the company. How was it? The never a dull moment. It seems like you were never in the office.
No, it's been a very busy year. January, February, March have all been very busy. I think I've only had 2 full weeks so far in Sudbury in the office. And then I've been traveling a lot, doing some marketing. And yeah, last it was PDAC, and then just last week I was marketing in Toronto and Vancouver. So it's been interesting. Obviously, much different times marketing in January and February as to March. But overall, it's been really good.
Yeah, very good. This 2026 was going to be the year Magna Mining was going to put its stamp on operations at McCreedy, but also with development and potentially bringing Lavack back online. With the first quarter wrapping up here, Jason, in 2026, and with that first full year under your tutelage, what was Q1 like for you, and do you see things kind of in fruition to get back and pushing these things forward the way you see fit?
Yeah, Q1 has been really, really good. I've been really happy with the progress we've been making, right on track. A lot of things, we talked about last time, getting out our guidance on McCreedy and our reserves for McCreedy, which was, a big deal for us to get that in place. After 2025 was really a setup year. So now we're in, with a full team at McCreedy lined up, I think, to execute a solid plan. And, at Lavack, which really I would say is our flagship asset, things have been going really, really well. We've been doing development currently underground, broke through to our 3600 level, connected up to Ballet's Coleman mine next door, which, they funded that development so they could use our mine as secondary egress, but opens up tremendous amount of exploration potential and drilling platforms for us with that. And now we're using that same development team to be doing some exploration development, but we will be accessing, some mineralization, some of our resource up on the 1800-foot level, as well as on a few other areas over the next couple months. So that's really going to put us in a very strong position that we will be able to start hoisting some waste and ore later this year. And, with our PEA coming out somewhere in the early part of Q3, I think it'll really speak to the potential economics of Lavack mine and a restart. And all of that while we're still very, very much drilling off the R2, which, we've had good success so far, and we don't see that changing. And we'll be drilling hard on the R2 and those areas around R2 for the rest of the year. So everything is clicking right along, and Crane Hill as well. We have everything in place to bring in our power line, our grid power, which will be happening over the next few months, as well as getting all the permanent dewatering and surface infrastructure set up. So once our PFS is done there later in the year, we'll be in a position that if we, choose to, we can start construction at any time, being fully permitted. So it is it's a busy year, but executing right on plan. And it's great that we raised money last year to be in a position to do this.
I think anybody who raised money before March is really happy they did it when they could, Jason. A lot of companies cashed up for development and exploration right now, and that was before the volatility in markets on the back of Middle East war. Precious metals they kind of took it on the chin. I think we were overdue for a meaningful correction, regardless here, Jason. But gold's still $4,500. Silver is about $70. Platinum, palladium, they've taken a hit. Platinum about 1,900, palladium 1,400. I guess you can say an ounce. Give or take. I'm not quite sure where nickel is right now. You can maybe quote me on that, but just kind of curious. I mean, despite the volatility in the metals, how is it affecting not only the operations and the cash flow of Magna, but also the inputs for those technical reports you have down the pipeline for this year?
Yeah, I think there has been some corrections, you could say, in the metals recently. But when you look at where metals were even last summer, we're still so much higher. And if you look at 3-year averages, we're doing really well. So with our technical studies and our budget and our guidance, we obviously use much lower prices than currently what we're realizing. So we're very comfortable with where metal prices are right now. And I do think that we're going to figure out this whole Middle Eastern situation, sooner or later. And I feel there's, based on the marketing I've been doing recently, there's quite a bit of money on the sidelines, and the overall sentiment is that, this will get settled, and when it does, we're ready to start investing hard again. So I expect there to be a pretty good run at some point whenever things get sorted out.
Okay. We talk about kind of the expectations for financials and production numbers from Q1. We're about wrapped up. I mean, I know you can't give away the numbers or anything. In fact, you still got a day or two here left here, Jason. But what are the expectations, cash flow wise, that investors will be seeing?
Yeah, and I can't give away probably even that much. What I can say is we will be very shortly putting out a press release on when we will be providing those financials, and we have up until the end of April. So we'll hopefully get it done fairly soon, but it will be in April. But what I can say is that, we executed very well. We put out our production numbers for Q4 back in January, and, we had both good tonnage and decent grades, and those were ramping up, November over December. So it looks, I would say, from the production standpoint, everything is on track, and that kind of lines up with the guidance that we were giving. And I think that I'm looking forward to getting those financials out and being able to talk about it in a lot more detail.
Okay, very good. I'm really curious on the PGEs and how that's going to be playing out this year. I remember, about a year ago, I kept on asking about platinum, palladium, and how much that was going to contribute to cash flow, Jason. And that was back, $900 ago. So, despite this correction in the metals prices, we're still double to where we were from February of last year, right? So we're still a nice little run here. But at $1,900 platinum, $1,400 palladium, are those meaningful? Is that meaningful revenue for you guys at McCreedy if we just focus on McCreedy?
Yeah, it does definitely help at McCreedy for sure. Now, obviously, as anyone who's been following the story is aware that there is a precious metal stream that was historic, something we inherited with the acquisition. But it is very meaningful, and as especially platinum and palladium prices go up, because we're paid on gold equivalent ounces, so that ratio of platinum, palladium, and gold is important to us. So high platinum, palladium prices definitely help. Means we get paid for more gold equivalent ounces when you do that average, and and we get some of that exposure. Not enough, not all we want, obviously, but we do get some of it, so it does help a lot. Copper is still going to be the main driver of revenues, but those byproducts can be pretty meaningful. Where we're really going to see that, I believe, is going to be at Lavack mine. There's a lot of precious metals, especially in the footwall. The contact runs typically 0.5 gram to 2 grams at sort of the higher end. But in the footwall, as we've seen with some of the drill results and the historic mining that was done in the Morrison deposit, you can get areas where you're even diluted, an ounce per ton of platinum, palladium, gold. So really spectacular precious metals, and that stream only covers the Morrison deposit. It's got a fairly tight box around it. So, R2 and some of these other areas in Keel Zone, we get full upside on the precious metal. So it is, that's what we're really excited about. And Crane Hill is the same way. Crane Hill has a tremendous amount of precious metals. That resource is 18 million tons, and it, has lots of nickel and copper, but also about 2.5 grams of platinum, palladium, gold. So, we're really looking forward to seeing that PFS completed to show the economics and using, higher price decks than what we did from the 2024 PEA.
Yeah. As you should know, energy prices have gone up pretty meaningfully in the last couple of weeks here. That means diesel prices have gone up. That's a huge line item for any operator, Jason. What can you tell us about Magna's energy usage, their diesel usage, and anything you've done? Have you hedged those beforehand, or do you expect those costs to be meaningfully higher moving forward this year?
Yeah, we're definitely going to see, some higher prices on diesel fuel, for example. But, being very simple operations, ramp access, shallow mining, and trying to focus more on grade than just moving a lot of tons, which require a lot more equipment and a lot more fuel. I don't see it being, a significant challenge with us in rising up costs. We have enough areas we think that we can reduce costs, and we're working on all of those that I think will more than offset it, and we'll be able to probably improve on costs year over year, and even with slightly higher fuel costs.
Can you share some light where you would be potentially cutting costs?
Well, some of the things I guess I can share, and some things I can't. Some of it's on the commercial end. And sort of how some of those costs work and how we get paid. And there's a number of areas we're in discussions on those items. But a lot of the areas is just on finding efficiencies so that we can utilize our equipment people better to do more. And we're seeing that with efficiencies and productivities around development. We're seeing it on, utilizing equipment much better. Definitely doing more preventive maintenance to keep, the availability of equipment up, and, costly breakdowns minimized. So all those things are improving as we sort of get more mature in owning this business.
Okay. All right, Jason, appreciate you coming on the podcast. We're going to do this again in about 3 weeks' time on site in Sudbury. Looking forward to that trip.
Absolutely. And, I'm hoping we'll have some more news to talk about and some more updates. It'll be really good. I'm looking forward to it, Trevor.
I know. You've been pushing for me to get up there, and after 2 years, I'm finally making it happen. So,
all right.
All right. Jason Jessup, CEO of Magna Mining. They do trade on the venture with NICU and on the OTCQX with MGMNF. Jason, have a great rest of your week.
You too, Trevor.
The information presented should not be considered investment advice. Mining Stock Daily and its affiliates are not responsible for any loss arising from any investment decision in connection with the material presented herein. Please do your own research or speak with a licensed financial representative before making any investment decisions.